Going on? Happy Wednesday. This is the morning show, Stock Market TV, Spencer Israel, JC Parets. Steve Strazza is on the road this morning. So if we're lucky, he'll join us via phone, via satellite, as they say on cable news. But if not, we'll hear from him tomorrow. What do we got going on today? A lot going on. Well, let's see. Let's see this thing about Joby Aviation. Toyota bought more. They're now the largest shareholder there, so that stock is ripping this morning. I'm watching Abercrombie and Fitch. Man, I wish I had Jeff Mackey on this morning because Abercrombie is up 27%. Holy cow. I don't know what's on JC's radar. I haven't actually read his morning note yet, so if I had read his morning note, I might know. But I didn't, so I don't. That's kind of how it works. All right, we got Jim Denholm on the show today. He'll be on around 9 o'clock. He's from IronBridge Private Wealth. We'll have Kenny Glick on. We'll have Mary on. We have you in the... Oh, thank you. And yes, it is NVIDIA day. That's right. NVIDIA earnings after the close. Do we care? I think we care a little bit, right? Probably just a teensy tiny bit. Yeah? All right. Should we dance? Should we boogie? Should we get the show on the road? We shall.
Oh, we back, baby. We back. You didn't read my morning note?
Not yet. I am behind.
It was all about
email this morning.
Well, actually, the morning note doesn't go out until like 9 something. So there's no way you could have possibly read it.
Well, I haven't read any morning notes yet today. I'm behind on my email this morning. That's the point I was trying to make. Got a lot of reading to do.
It gets out. It's a good question. Let's see. What time does it normally go out?
I haven't read anything. I haven't read anything.
Let's see. It goes out at. Let's see. Yesterday's went out at 9 o'clock on the dot. 9 o'clock on the dot. So there's no way you could have read it.
No, sure.
But I'll give you a heads up as to what we were talking about today. We're talking about the short interest in ARK, right? So ARK is Cathie Wood's flagship fund, the one infamously known for losing investors the most money in the history of ETFs, right? So rather than all of the short sellers coming in before all of those stocks collapsed and the ETF collapsed, all the short sellers are piling in afterwards. You see how this works? So when all these short sellers are piling in, I like that. So yesterday we were on a Spaces, and my question was whether the word ARKy was an adjective or an adverb.
It is an adjective.
As our resident English major.
An adverb, this is how you know what an adverb is, okay? Adverbs are almost always ly words, okay?
Oh, okay.
That's how you know. So, handedly, adverb. Hurriedly, adverb, right? But so if it's not...
So ARKy would not be an adverb.
Correct. ARKy is just a plain old boring adjective.
But isn't an adverb an adjective of a verb?
Right. So in other words,
what if it's like
it's an ly word. Ly word.
Like what if it's like an ARKy ripper? Like, or no, that would still be an adjective.
That's 2 words.
So. No, but ARKy. Yeah. All right. So so the answer is it is an adjective.
It is.
Right?
It is
an adjective.
It is as adjective as adjectives get. Yes.
And that's what the morning note was about. Just so you guys understand the type of value that I'm bringing to the table here, deliberating whether or not ARKy should be an adjective or an adverb. I mean, this is real value, guys. I mean, if you're not paying attention, I mean, what are you even doing around here? What are you even doing? We'll get into exactly what this means. The adjective versus adverb conversation is fun and all, but there's actual money to be made and actually what's happening there in the ARKy names, right? The adjective. So what do you say we do a little state of the markets and then we dive into what's happening?
Yeah, right.
All right, ladies and gentlemen, we have the Dow futures this morning doing absolutely nothing. There is not a thing happening in the Dow futures. It is actually exactly flat, 0.0, Mr. Blutarski. 42,400 flat this morning for the Dow. S&P's up a smidge, just a smidge. 7 handles to the upside, 59.41 for S&P's. NASDAQ 100 leading the way to the upside on NVIDIA Day, up 60 points. It's about 0.25% to the upside. Bonds are flat, 112.5 on the 30-year. Crude oil up 1.5%, percent and a quarter here, 61.5. Copper down 0.5%, 472. You got gold up 0.33%, 33.38. Silver up a smidge, 33.40. With the VIX still at 19. Got smoked yesterday, but still at 19. Over in funny money land, we got Bitcoin 109 even, flat on the day, 109,000 that is. With the ETH up 0.5%, 26.76. The old Solana 175 down 1% on the day. And that brings the total crypto market cap, Mr. Spencer Israel, to $3.4 trillion. $3.4 trillion. What stands out from this morning's futures?
The quietness actually is what stands out. The quietness for stocks, I should say, right? Because the Russell is unchanged. These futures, the Dow futures are, as you said, unchanged. The Nasdaq futures are up a whopping 0.29%, which is might as well be zero. So, yeah, a quiet morning. Not that I'm not against it. I like it. I like to make a quiet morning, but it's interesting, I think.
So. Oil poking up. That's interesting to me.
Oil poking up.
Yeah, oil making some moves. Bonds really? Catching a bid over the last week.
Is oil poking up? It's below where it was 2 days ago.
It's up a quarter. It's up 0.25% right now. And I think that whipsaw that we had in oil over the last 6 weeks or so, I think could be pretty epic. The way I look at it, first gold moves, then copper moves. What's the next logical move in terms of commodity cycles, if history is any indication, and that is energy. And there are certain energy stocks that are doing really well. We got this, we got the Comstock that keeps acting well. We got options, hit new highs yesterday. So there are names in the space. And then when you look at the short interest, you got oil services and explorers and producers up with some of the highest short interest of any ETFs out there, oil services and the explorers and producers. So yeah, energy definitely standing out to me. Can we talk about this GameStop news? They're buying Bitcoin. Can you throw up that slide too, please?
Not buying. They already bought it.
Oh, they already bought. Excuse me. They already bought. So you're saying they're not buying more?
They probably are. They bought 4,710 Bitcoin. Bitcoin. I don't actually know. Is Bitcoin the plural of Bitcoin?
I think it's like Euro. It's 5 Euro. It's 1 Euro. It would be 1 Bitcoin, 1,000 Bitcoin, right? Like I think Bitcoin is the plural.
That's what I'm realizing as I said it. I think
moose, right? It's 1 moose or 200 moose.
Right.
Right.
All right. Let's get this chart up on the screen.
Yeah, throw that up. So there it is. There's the GameStop. Look at that consolidation. So there's that ripper in 2020, 2021. And then look at that consolidation since then. Not for nothing. Looks pretty damn good. I'm not going to lie. I don't own any, but I do want to point out that September 5th, 2020, under the hood report that highlighted GameStop well before any monster squeeze. You see that?
I do see it.
What do you think about that, huh?
I've been wondering about GameStop and AMC because, like, can you really have animal spirits without these two stocks? Or at the very least, maybe not AMC, but can you really have animal spirits without GameStop doing something? You can?
Yes.
Oh.
Yeah, of course.
It's been awfully quiet, so it's not quiet this morning. but
it's not quite this morning. I know that people like to make a big deal out of GameStop. It's only $15 billion. Like, it really doesn't matter at all.
I would have bet the under. That is more than I would have thought. $15 billion. That's a lot. $15 billion for a mall retailer that now owns Bitcoin.
Well, to be fair, just in the last year, it's tripled.
Well, there you go.
And it's doubled in the last 6 weeks. So, it was 5 a year ago. It was 7 6 weeks ago. So if you would have taken the under, at any point other than today, you would have been correct.
All right.
So it's made some moves recently that skews that to the upside. But are you asking if the animal spirits could be alive and well without GameStop participating? The answer is yes, because GameStop doesn't actually matter, right? And it's only got a short interest of 12%. So it's got some shorts, but not anything crazy.
12% is not hot. That's below my line, right? What's the days to cover? Because I
6.
6.
Yeah,
that's not nothing.
It's not nothing, but it's not like this like epic setup here. And then so what the under the hood report does is that it as we're well aware, this is something that looks for unusual changes in investor interest, right? When everybody's paying attention to a particular name. And the under the hood report highlighted the GameStop in September of 2020, like right as this epic squeeze was just getting going. So I know I put the link there. The All Star Charts team put that out earlier this week. And throw up slide 3 so you can see what this week's scan looks like. And Spencer, if you want to put that in the chat there for people who are interested. And this is the current iteration. This is this week's report. And this was inspired by Robin Tracks. If you guys remember Robin Track.
I remember Robin Tracks. Yeah.
So Robin Track used to take, back in the day, Robinhood had an open API. And I'm going to pretend I know what that means, right? But this open API.
It means that anyone can use their data for whatever they want.
So it allowed for this said Robin Track to go ahead and track the big changes in the positioning of the accounts in Robinhood. And you used to be able to see the big what people were piling into and people getting out of, and that was really great. It was a great way for us to generate new ideas. Like every day we had new data. It was fantastic. I loved it. And then one day Robinhood said, you're done. And so they cut off their API, and the Robin Track was no longer able to deliver the goods. And so we created the Under the Hood report, which takes all the brokerages into account. And we're looking for unusual increases in investor interest. And just because they're piling into the name doesn't mean that we want to buy. In fact,
I was going to say this is not a buy signal necessarily. I mean, look at number 9 on this list, right? FICO. I don't know if anyone's seen that chart the last couple of days, last week or so. It's been it's literally in free fall mode, right? So, and there's some news. I don't want to get into that, but this is just because you're on this scan doesn't mean you want to buy the stock, right? It just means.
And what else is happening out there? I got a couple of charts, but if you could tell the folks what else is happening out there today.
Okay, let's run through. I kind of did it off the top, right? But Abercrombie and Fitch is sort of your big gainer. It's up 28%. You know what we need to do? We need to get Jeff Mackey on the morning show on a regular basis. We've had him on probably 3-4 times now. We got to get Jeff back on like on a weekly or bi-weekly basis, especially during earnings season. That's my bad. We should try to get Jeff on maybe tomorrow or Friday because we have Costco reporting, but Abercrombie and Fitch is the story of the day. As far as movers go, it's up 28%. And you've seen kind of the theme of this retail earnings season has been like they're buying it all, right? Pretty much with a couple of exceptions, pretty much every earnings report's being bought. Even if there's a dip, it's being bought like that day. So kudos to Jeff, kudos to retail. Retail is not dead. That's the theme here this morning. Costco is tomorrow, right? Chat, help me out. Costco's tomorrow, I think. but I care about that one a lot. So, what else do we have here? Not much actually. Not much in the way of movers, right? Yeah, Joby. I kind of mentioned the Joby. So what's the deal with the Joby funds? Is Toyota was an investor, and now they bought more. Is that the deal? They've invested another $250 million into Joby Aviation. Yeah, here's the hot corner from today. So $250 million investment from Toyota into Joby. That makes them the largest shareholder in the company. So cool. So Joby's up what, 12%? Nice. Gives them a 16% stake. Wow. And Joby is 29% of Toyota's equity portfolio. Thank you, Fonz, for all that color.
I got in the Archer last week. So Archer would be like a competitor to Joby. Do I have that right?
Yeah, as far as I know, those are the only two public companies in that mobility space, like Uber for the skies. Is that what they call it?
Is that what they're calling it? Like,
that's what it used to be like back. I don't know if it still is, but like definitely like Uber for the skies was like one of the things that they said when they were going public via the SPACs a few years ago. Yeah, Jonathan, Okta is down what, 14%, 14% this morning. That was on there. That was an earnings report, right? So,
can we throw up the ARC components, right? So this was a big topic of conversation yesterday. It's in my morning note that's being released in 12 minutes. And then we're looking at all the ARC components sorted by short interest.
Okay. My question for you, I don't know if you know the answer to this. You probably don't, but is there a way, I'm sure there is a way, to measure the top heaviness of ARC over time? Because right now, just eyeballing it, the top 1, 2, 3, 4, looks like the top 5 or 6 holdings in ARC are about half of the fund, right? So is there a way to measure that? And do you care, I guess, is the other question.
No, I don't care.
Okay.
Because it's not that much. Like, you know what I mean? Like these funds, like we talk about how, they lost more money for investors than any ETF in history. And a lot of that had to do with their AUM. But at the end of the day, in terms of the market capitalization of these things, I'm not really interested in that. I'm more interested in the fact that people hate them. People hate her. People hate the funds. People hate the stocks that are in the funds. I love that. It's kind of like the Elon Musk. Like all these people were hating on Elon Musk and, how terrible of a person he is and da-da-da-da. Man, I was buying Tesla so aggressively on that. Like, are you kidding me? You're going to hate this guy? Great.
Well,
I'll buy your hatred all day long.
What's crazy about the ARC is like, so it went from 36 to 68, right? Last year, 36 in August to 68 in February, right? So 6 months, which is great, obviously, right? But if you compare that to what some of its holdings have done, like this has kind of showed me the downside of ETFs, which is that you're not going to get as much juice, right? So if you zoom out on the ARC chart, you can zoom way out, it looks like it's barely moved, right? Because it has barely moved compared to what some of its holdings have done this cycle. So it's kind of discouraging, right? I mean, yeah, it's diversified, but that means you're not going to get the juice.
I guess. I mean, not everybody. It depends on what you're trying to accomplish. If you throw up the news slide too, there, Spencer.
I know you guys use it as a source of information, but I mean, I owned ARKW back in the day for a while. I rode it all the way up and partially most of the way down, right? Not all the way, but a little ways.
This gets back to that old school mentality about, the bigger the drop, the longer the need for repair, right? This goes back to the 1950s, right? And my understanding from the guys who taught me, who learned it in the 1950s, is that they learned it from their predecessors that had already been trading for decades. And so we're looking at this hot piece of shit that is the ARC Innovation ETF that went from 150 to 30. So you do the math. This is one of the worst This literally destroyed more shareholder value than any ETF
Well,
family in
first
history.
it created more, then it destroyed it.
Well, it went from 150 to 30, so we that is the sheer definition of a piece of shit,
Also,
right?
not Kathy's fault that a bunch of people flooded into her funds in like the spring of 21, like after the peak, right?
Yeah, but hold on. This is an 80% drawdown, right? So this is a portfolio manager that
That
lost
is
80% of the fund. 80%.
that's a lot for any. I talked about ETFs not giving you the juice. 80%. That's a ETFs shouldn't go down 80%.
Just think about how bad of a portfolio. I'm not saying anything about her. I'm just saying, generally speaking, how terrible of a portfolio manager you need to be to have an 80% drawdown. Like, that is criminal. So this goes back to the 1950s, which my understanding from Alan Shaw, this goes back even further than that. But I don't know who taught him that. He's told me the names. I didn't recognize them. So let's say this goes back 75 years. The bigger the drop, the longer the time that's needed for repair. And an 80% drawdown is a pretty severe drop. We can categorize it as that. So what's the lesson? The lesson is, from a big drop like that, it's going to need a long time for repair. Here we are several years later, and this piece of shit has done nothing. And then short sellers, in their infinite wisdom, were not short at 150 before the collapse. No. That would make too much sense. The short sellers are piling in now. That was when they're piling in. So now I'm interested. So we take a look at this, and then, really just showing how bonds have really impacted this. If bonds are crashing, there's going to be selling pressure in these ARK funds. So, if you think rates are coming down and you're going to get a bid in bonds, which I don't know if you've checked, commercial hedgers are actually incredibly long treasury bonds, 5s and 10s, right? So if bonds continue to catch a bid, I think that's going to be good for ARky stocks. And these are names like Coinbase and Tesla and Archer Aviation and all of those. And so if you want to throw up slide 7 here, slide 7 and 8, this is just a great example. Tesla, is it the poster child of ARK stocks? I mean, I guess maybe it has been in the past.
It has to be, as long as it is the top holding, which it is.
Is it the top holding?
It's the top holding in ARK, in ARKK. Let me tell you if it is the top holding across
like
her
in the
family.
fund family in general, right?
Let me tell you, it is. Yeah, if you measure everything, it is Tesla's 10% of the 1, 2, 3, 4, 5, 6 family of active ARK funds that they've got.
12% of ARKK, so it's the largest component of ARKK, which is the flagship fund.
Yep.
Right, and ARKK currently has.
So the top combined holdings of all 6 funds are Tesla, Coinbase. There's Tesla at 10%, Coinbase at 7%, Roblox at 6%, Roku at 5%. That's kind of crazy, and Palantir at 5%.
So we're looking. So we just got this upside resolution yesterday in Tesla. This is just a great example. For whatever reason, I really don't understand it. I'm not into politics, and I certainly don't let politics influence my decision making in the market, because I'm not an asshole. But fortunately for us, there's a lot of humans that are just too mentally weak to not allow those political beliefs influence their decision making in the market. And there's money to extract from weak humans. And so 6 weeks ago, a couple months ago, when the tampon guy was dancing in Minnesota, remember? And he's, talking about how broke he is and how he doesn't own any stocks.
You love talking about him, don't you?
Hold on. But sorry. So he's always talking about how broke he is and how he doesn't own any stocks, but he has the time to watch Tesla stock every day go down. Guys, if you're not paying attention, like, what are you even doing here? Like, the signs were there. Tesla's obviously exploded higher. And this is all part of that ARK unwind, that ARKy. I mean, this is the poster child, right? Even Spencer agrees with that. Tesla is the poster child for ARK that has the highest short interest ever. Highest short interest for ARK ever. Poster child absolutely ripping off Tampon Tim's dance, a couple of months ago. I mean, that was the beginning, and I don't think it's over. So this is what we call a bull flag. And for those who haven't taken as many technical analysis exams as we have, A bull flag is essentially just you have a monster rally. That's the flag pole, if you will. And then you have a consolidation, which looks like a flag waving, as this one does. And then upon that resolution of that consolidation in the direction of the underlying trend, normally, the flagpole itself, in other words, the move that got it to that consolidation tends to repeat. And so you could take the amplitude of the move that got it to the flag, add it to the breakout from the flag. And if this is in fact if this Tesla trade is actually a bull flag, and go to the one with the anchored VWAP, then the measurement takes us back to the all-time highs near 480, right? So there's the anchored VWAP from the all-time highs. The average buyer is making money. And when you study uptrends throughout history, you'll notice very consistently that people who own the stock are making money when the stock is in an uptrend. And I know that might seem like common sense. Yeah, thanks, JC. But really think about that and what that means. In uptrends, the people that own the asset are making money. So if you reverse engineer that, and you could see, and you can answer the question, hey, are investors making money? So we can determine whether or not this is an uptrend. And as it turns out, investors are in fact making money in Tesla. So while, the tampon guy's dancing about Tesla stock going down, the smart people were laughing at him and buying the Tesla stock very aggressively and changing their lives. This is going to, I haven't taken profits yet. I've actually added to some positions, but, this has the potential to be the greatest trade I ever put on ever. And I have a one Tampon Tim to thank for that. So we are incredibly grateful for what an asshole he is.
You know what I was just noticing about the ARK funds? So our ARKK, which is the flagship, which has been around since 2014, that's the largest fund by assets in the ARK family. But at the rate we're going, the ARKB, the ARK Bitcoin fund, is going to pass it this year. ARKB has been around since January of last year, and it is already within $500 million of ARK. It's got 5.2 billion, and our ARKK is 5.7 billion in assets. So the Bitcoin
that's
fund,
not a surprise, because right, as Balchunas is always talking and telling us when he comes on the show, like the money flow into these Bitcoin ETFs.
I know it's off the charts. It is off the freaking charts. But that's kind of crazy. All right, wait, let's bring out Kenny real fast, and then we'll bring on Jim Denholm for today.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house.
What's up, Holmes?
I thought you were going to be playing golf this week.
No, the boy's playing golf, but I got him chained. I got him chained to the desk next to me now, so we're gonna make a new trader out of him.
All right. Be careful what you ask for. You know how great this could be, and you know how terrible it could be, right?
He knows how terrible it could be already.
Okay,
yeah.
Good.
Yeah.
Good. The sooner you blow up, the better.
Yeah. What's going on?
Big move yesterday in the markets, absolute face ripper. We're coming off some of the most pessimistic levels in the history of the stock market, from individual investors to portfolio managers, newsletter writers. I mean, just the pessimism is on another level. I'm here for it, right? I got time for that. So we've been buying stocks, obviously, because historically that's what you do when people are as angry as they've been. And so, the rally continues. So as our resident perma bear, our resident open-minded perma bear. So just because he's a perma bear doesn't mean he's shorting. Quite the opposite. He's long quite a bit, in fact. Tell me what you're seeing. I'm very interested in what
I bathe in the tears of my ex-brethren now. So I've learned the hard way. But you know what? My new favorite stock is this NVTS. It's the action. Again, I'm all about the action. I like being bearish because it keeps me focused, and I like playing fades. And I know, especially when people are overly bearish, that's time to buy. But when the complacency sets in and the overly bullish people move in, that's when I start to twist my mustache. But NVTS, everything you want. Cheap, it moves. Cheap and good, like my ladies. But this one was awesome. You got, the motion of the ocean has been all what we're playing right now, ebb and flow. So yesterday, $5 stocks to get to 750 tend to find.
That's what you tell the ladies. It's the motion in the ocean. That's what you tell them.
$5 got you 750 all in one day. Usually you'll see some profit taking up there at 750. So we played the fade on that. Yesterday was a clinic. Yesterday, before again, on the surface, it looks like it was just a beautiful rally, but the fade was awesome. We shorted the Qs, we shorted some of the nuclear stocks. We shorted Ryan Reynolds, which was odd because I'm a big fan of Ryan Reynolds. If you don't know, Mountain MNTN. But just sticking with that play, take a look at NVTS again this morning. And again, this is what I love doing. A month ago, Hertz came to life, and all we did was traded Hertz for 3 or 4 days, and then it kind of fades away and the volume dries up and you move on. NVTS is now going on day 4. If this is the action you keep providing me, I'm going to keep trading the stock. So again, this morning, monstrous move up, and then that same 750 area came into play, shorted it 750, you broke the VWAP, and you went back to 7. So $7 stock moving in dollar increments, that's a day trader's dream. So big fan of NVTS, but
that's the next NVIDIA. Do I have that right?
That's what they're saying. That's what the
quote
kids
unquote,
saying.
quote unquote.
Yeah.
It's a $1 billion company versus pushing $4 trillion for NVIDIA. So the next NVIDIA is a little aggressive, a little, but that's okay. That's okay. A little hyperbole on occasion is not the end of the world.
Yeah. Well, there's a rumor going on already also that NVTS is going to take out Wolf, what's left of Wolf, and they're both going to get bought by NVIDIA. So that's out there. Whether, and again, I'm not trying to substantiate a rumor, but that's what's out there. Wolf in NVTS combo to be taken over by NVIDIA. And if it happens, fantastic. Good luck to everybody. But I'm about Abercrombie and Fitch today, looking at A&F. Up.
Dude, NVIDIA's parties. Think about it. The parties NVIDIA throws cost more than acquiring this company.
There you go.
Like, let's be serious.
Right. So maybe they're into it. We'll see. But
what else?
And Fitch, what's this stock doing up 20 points? So I'm sitting there,
man.
I'm waiting for my chance to short this bad boy. So above 100, probably not looking to short it, but it's in a little tiny. It's a mini uptrend so far this morning, but if it rolls under 96.50, that's when I'm going to be really interested. And if Abercrombie and Fitch is below 95, I expect to see it at around 92. So there's my 3 or 4 points on the fade. So I'm looking at Abercrombie and Fitch short. And then you got Macy's also. I don't really, again, Macy's doesn't usually move too much, but under that 12.35, 12 and 3/8, as the kids used to say, 12 and 3/8. Maybe look for a fade back down to 12. Again, I'm not a big fan of trading Macy's, usually kind of dead money. But this market also, just going back to this bull market that we're in, we are still in the power gap. So Friday, the tariff man tried to force us into the power gap from, I think it's May 11th, and we didn't go anywhere near the bottom of the candle. So we're still in that power gap. It's very difficult for the market to sell off. This is day 12. Just from the power gap, and you have 2 little gaps before, underneath that. So this market is so super bullish right now, it's scary. It really is. And people might understand that it's probably looks like we can go easily another 10% up before another correction. So that's another 50 points on the Qs, which is all-time highs, my friends. And you asked me 6 months ago if you thought we'd see all-time highs, and this is before tariff tantrum. February, we saw some selling. I thought the market would correct and maybe just consolidate this year. Now I'm thinking all-time highs is inevitable, which is crazy, but it looks like
with the amount of pessimism out there and just how angry people are, second lowest print in the history of the consumer sentiment. I mean, what could be better than that? I mean, what you don't want as an investor is that you don't want all this optimism and all this euphoria. You want people angry as shit like they are right now. It's great.
Yeah. Well, I'm angry as shit. Somebody make this SRAD move.
What's an SRAD?
SRAD is a company that I'm really interested in because this is my son just graduated college. Hey, let's say hi to everybody. There he is. Look at his fancy.
Oh, there he is.
His fancy desk.
Look at this guy over here.
I gotta get him a real desk.
So now college is over. So that's it.
Yeah.
Life is over now. All the good times are behind them. It's over now. It only gets worse from here. Is that right or no?
He thought he was going to sleep till past 8 o'clock. I was like, chop, chop, boy.
Dude, are you kidding me? I'm up at 5. Let's go. Let's go. You think this money's going to make itself? We got to get paid over here, baby.
So he went for like sports management, data analyst. He started as a finance major. SRAD is basically everything that we love. It's data analytics around gambling. So how the live trading gets calculated, and also the company goes around. They're a global company, and they just collect data and sell data, and that's a good space to be in.
Yeah,
And
that's not bad.
It's a very boring stock. This is typically, again, a typical investment of mine. The market's ripping. This thing, it's been 10 days now, and I'm glad it's up $1.50 since they reported, but that's generally what I get. I don't get when I buy CoreWeave, not every stock's going to go from $50 to 120 in 6 days. This is typically what I get. I get a stock that goes up 20 cents, pulls back 8, and then closes. But it's a decent looking company. The chart is pretty nice, and we're only 4 points away from all-time highs in stocks that break all-time highs. That's a good thing. So if it gets into the 30s, I'm going to be real excited. So,
all right. So this is a boring one. Give us an exciting one. One more on the move before you hop.
Exciting has been. You guys, have you watched Pony? I mean, this stock is all over the place. We had some fun with it yesterday. PONY getting smacked this morning. So now that it's getting smacked down, I'm looking for a comeback. So this stock has been on fire, and now it's pulled back to prior day VWAP. So give me down to 18 and 50 today on the Pony. I'm looking for some support, and we'll see what goes on.
You know what I love about the Pony? You know what I love about this company?
Who doesn't like Pony? I have Pony. He has Pony.
You're spot on. Who doesn't like Pony? When you're a company and you're just like a fake Fugazi company, right? I don't know whether this is or whether it is, and I assume I assume this is a fake company. Exactly what you just said. What do people love? People love ponies, and people love AI. So let's call the company Pony AI. Let's see if it works. And as it turns out, you bet your ass it's working.
Absolutely. That's the funniest thing in the world.
That's what I like about that. That just makes sense. Who doesn't love ponies? Like, seriously, if you don't love ponies, like, I can't be friends with you. Like, they're just so cute and adorable. And then AI, all the kids are talking about it these days. So when you put both of those together, forget about it.
Right. But to that point, that's what makes me bearish. When we're buying stocks because of the name, that's one of those moments I'm like, oh man, here we are again doing this. Well, we just start doing pink sheets and Blockbuster.
Yeah, but the timing of that is not great. Eventually the dump will come, but the pump can be very powerful.
Oh yeah. Yeah. What else we got? We got
nothing like a good pump and dump. As long as it's somebody else getting in trouble and not me, I'm just profiting from the situation. I'm all for it.
Word up, WRD. I mean, we ride. I gave it to you guys last week at around $7. This thing just does not want to die, and it already has 2 faux show bros today. We ride. And this thing, I don't know. I think it might be a Chinese ride sharing.
Yes,
company.
That's what it is.
What could go wrong?
Right. But above 1250, you're looking at a stock that could easily be at 15. And if it gets to that 15 area, you're looking at $20. So this is, again, we're day traders. You give me an $11 stock that's ripping back and forth 2 points every day. I'm a fan. That's why NVTS has been awesome. So keep an eye on that one. Also, it's actually turning right now on the WRD. Plus, I like the name of the company. So
no, 100%. The
Uber
of China, $3 billion market cap. Mr. Kenny Glick, I appreciate you, dog.
Regulators, we ride. See ya.
Never a dull moment with a one. Kenny Glick, ladies and gentlemen, check out Glick's Picks at hitthebid.com. One of the
Glick's Picks isn't a thing, but hitthebid.com is a thing.
What do you mean it's not a thing? Of course it's a thing. We just had some of Glick's.
Yeah, all right, that's fair enough.
Give Kenny his love. He's always wanted to have something called Glick's Picks.
I know.
So we could just call it that, just to make him happy, because he's a friend of ours, right? He's a friend of ours. So we like to make our friends happy. He likes how it rhymes, Glick's Picks. So let's just give it to him. Let him have it.
All right, fair. All right, let's bring on Jim Denholm from IronBridge Private Wealth.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Jim, how are you?
Good morning. How y'all doing?
What's going on?
Well, first week of summer with elementary school kids. It's going to be a little crazy, but trying to stay focused. How about y'all?
I like that background you got going on there. That's nice, man.
Yeah, this is
What is
something that came in handy since COVID. It's actually real, which is good.
You have many leather-bound books?
Leather-bound books in mahogany. It's not real mahogany though.
Oh.
You're
So
kind
I
of a
don't
big deal.
want to put too, it's just coated with mahogany. It's actually gold-plated underneath the mahogany.
Nice. Nice. Jim, you still down in Austin?
Down in Austin.
Dude, I was just talking to some of my buddies. We were talking about Houston and Dallas and Austin. For me, I'll take Austin, right?
I don't think there's any question.
I got to tell you, I think I like Houston a lot. I know it gets real hot, but I'm a city guy, right? So when I go to Houston, it's like a real city, He's like, hey.
Have you stayed the night in Houston? I don't think
have.
you've stayed the night in Houston yet, if you're still talking about how great Houston is.
Yeah, so what's wrong with staying the night?
Oh, I don't know. It has gotten a nice food scene, I hear lately, but it is the definition of a concrete jungle. It's like a 22-lane highway going through there now.
Yeah. Yeah, no, I hear you. I got some bougie friends that live down there, some French wine snobs and stuff like that. So they take care of me. Maybe it's that.
Could be that.
They got those. There's a lot of money in Houston, man. These guys are getting paid.
There is a lot of money. Less with price of oil like it is today versus a few months ago, but
dude,
yeah.
I got these oil and gas traders down there. They're bougie AF, and they hooked me up nice, man.
You need to go. Have you ever gone by Midland? Speaking of bougie oil guys, you need to go spend the night in Midland one time.
I'm in. Let's go.
That place is its own world. It's pretty great. You talk about
I have to look at where this
guys.
is.
They have figured out bougie.
All right, Jim. Talk to me about current markets. Just had a ripper yesterday, coming off some of the most pessimistic levels we've ever seen. As somebody who looks at all this data and has for many, many years, these are, rare levels of pessimism that we're coming off. And, one of the things that I've learned, I've had to learn this the hard way, really, is, if you're taking profits too quickly when you're coming off an extreme unwind, that's a huge bummer. I can tell you for a fact that I have done that many times over the years, and I'm not letting it happen again. Damn it. I'm being greedy as hell this time. And I'm not gonna, and it's not easy, right? Because your position sizing gets a little extreme, and I'm a little less comfortable with some of the size that I have on because of how much money some of these positions have increased. But I'm not going to let that stop me. How do you think about my mentality here? Is that wrong, or you think I'm onto something?
No, absolutely. I think it depends on how much. Right now, it's about opportunity cost out of the market.
Yeah,
really. I mean, yeah, we could have a pullback, and we should have a pullback. I mean, we've gone straight up for a few weeks now, but these kind of environments, I think a couple different things with this environment. One, it's with the level of pessimism that we saw, that doesn't resolve itself in a month. That type of pessimism is on par with the low of 2009, when the entire financial system was legitimately rotten.
Yeah.
Like here, it's like Orange Man bad. It's like there's a difference. Like there's a difference in those environments, and you need to have some ways to tell the difference. Like this one to me was so obvious that it was 100% emotional.
Yep.
And I think the second thing you need to do in this kind of environment is really truly take a step back and analyze your behavior in that pullback.
Yeah. Because
I bet there's things that people wish they had back, whether it was selling early and taking maybe overriding a signal that they shouldn't have overridden, or looking at the wrong thing, getting caught up in the narrative, and take this time to go back and reflect. And you see this kind of pessimism. It's not like that's the first time we've seen it. You do a little bit of back testing. You just kind of scroll out on your chart, and you'll see that we've seen this multiple times. And every single time, what happened happens. It's not like this is some like random playbook that completely went against the face of everything that happened in the past. Like, this is exactly what should happen. I mean, we put some reports out right at the low that, look, this is 100% emotional. And so if you're reacting emotionally, you need to have signals in your process that temper that. Because I think part of a trading process is tempering your own emotion and taking that out of the equation, because that will completely ruin it. I think another thing with this market environment, it's all narrative risk. I think you have to go to technical analysis. You have to go through and get rules and using what's actually happening in the market. Tariffs don't affect the market. Tariffs affects people's minds, humans' brains, which then make decisions and project on the market. So, we have to, and I think this is the CNBC flaw of trying to explain every move that happens every day and thinking that we're actually explaining what's happening. It's supply and demand. And if you have these good rules, if you just have some rules, I think you can really help trading following an environment like this. But I think outside of some short-term pullbacks, we're not even getting that at this point. I think that's a sign of strength. I think you have to get with the trend. If you want to trade some counter trend pullbacks here and there, I think you might hit a good trade a couple times over the next couple months, but you're probably going to get steamrolled at some point. A 5 or 10% pullback would not be out of the ordinary whatsoever in all these bigger asset classes. But I don't see it rolling over. I don't see the selling pressure there to roll over.
I'll add a couple of things to what you're saying. So first of all, when you're talking about the pessimism and this moves has legs, and historically, that's the case. You're also seeing the behavior of the market and the pessimism continue with those ETF outflows. Equity ETF outflows, the highest amount of outflows from equity ETFs since really right before the market bottomed in 22, right? So, these unwinds, you tend to see those outflows reiterating that the pessimism is there. They're fading the bounce, right? That's historically evidence that it's not just a bounce, is that there's got legs, right? So your thesis, and my thesis for that matter, continues to get confirmed by the market action, right? It's something to reiterate. As far as the television is concerned, think of, they have to make up reasons for why the market is moving in that particular day, because, they know their audience are sheep, right? So like, I don't know if you've ever been to like a farm where they have sheep, and the lady or the dude that owns the farm, when they walk up to the sheep just assume that they're going to be fed because the dude or the lady is walking, and that's usually the dude or the lady that gives them the food, right? So on basic cable television, they know that their audience are sheep, and even if they're just making things up, and they, these are smart people, they know they're just making things up. They're just making things up to give the sheep what they want. And so when they start walking, towards the, where the sheep are, they all run towards them, right? So it's really the same thing, and it's a great business model, just lying to people every day, and then so that they can sell sponsors to, male enhancement pills and insurance companies or whatever they're selling their ads to, right? It's not a terrible business model, right? I mean, they're destroying their audience, but that's not their problem, right?
Exactly. But I think the market can go higher from here. Why not?
We saw who's the leaders. Who are going to be the leading areas?
I mean, I think you have to have signals that pick that up. I mean, I personally think we've got a short term left of this bull market, and I think the bigger cycle is a rising interest rate cycle. Like Tom McClellan's 30-year cycle on interest rates. I love that chart. And it's so true. Everything that's happening right now, if you view tariffs, deglobalization, currency, movements like we've seen over the past couple months, and view that in the context of the start of a 30-year rising rate cycle, it lines up perfectly. And so I think one of the things we could see is this AI kind of pull the big tech stocks are just such large parts of the market. You can't ignore them. And I think they're going to kind of pull the bigger markets up. Maybe we get a catch up trade with the small caps and the mid caps. But I think what we see is a couple years here. And then as interest rates have proven to be pretty sticky on the high side, that we've had about every reason you could possibly imagine over the last year to see rates move lower, and we haven't. Now that's a bigger time frame, but just like a stock that refuses to move lower on bad news, we've got an interest rate environment that doesn't, that's longer than a few days. The interest rate market are not going to be a stock that's moving 20% in a day. But if you zoom out and we view it in the context of this of the start, like the first or second inning of a rising rate environment, I think what that does is you end up with competition for flow, where you have, and I think you have bonds. I think you have cash that will beat the equity markets over the next 10 years. Goldman, I think, came out saying they think it's a 3% annual return. I'm pretty in line with that. But I think it's 30% now and flat for 10 years. So, thinking about what kind of overall environment, it's not just bull bear, but I do think shortening the time frames as this market sort of exhausts itself, higher interest rates are a wet blanket on top of the market because of the competition for flow. You lose the buyers that really push the market, into that next level bull market. Now, the flip side,
I think you said something really important there, Jim, and that's time horizon, right? So
Right.
First of all, when it comes to rates and these massive cycles, like these are really long-term cycles, like the longest, right?
Longest.
So how does these long-term cycles affect what's going to happen today or next week or even next month? Probably
I think
not
it's
much.
like, it's probably not going to snow in summer is kind of the way to view it. So if you're expecting after whatever happens with this current bull market, that's kind of the last sort of the tail end of all these kind of mini bull markets from a couple years ago, from 22, from COVID, from 20, we had a 20% bear market in 18. We had a 20% bear market, sort of a bear market in 16, 20% sell off in 12. Then we've had a lot of sell-offs here, but the market is substantially higher. So it takes a while for those bull markets to die. And it's why the lows are an event and highs are a top. We saw an event, and if you missed it, you missed it. And if you missed it, you have to go back and say, why did I miss it? And if you're honest with yourself, you're probably saying, well, I got scared of Orange Man.
Right.
And that we've been conditioned as a globe. I think this plays into the volatility. Frankly, we've been conditioned for 10 years to think Trump is a psychotic maniac. And so
then can you tell me more? I'm really curious about that because, I really like to use sentiment to my advantage. I especially like it when there's politics involved because people get even crazier, right?
Yep.
So I love that. This Tesla trade, has been a grand slam for us. I mean, the signs were there with what's his face dancing up in Minnesota, about the Tesla stock going down. I mean, if you're looking for a sign, right? What's that comedian, Spencer? There's your sign, right?
Yeah.
Here's your sign, right? What's that guy's name? One of those.
He was a redneck comedy
one
guy.
of the redneck guys.
I don't know. I don't even know what reference you're
Foxworthy.
making.
Jeff
What's his name?
Foxworthy.
Oh, Jeff Foxworthy? Oh,
No, it
man.
wasn't Foxworthy. It was one of his guys. It was the other guy.
Oh, okay. Well, whichever one it was.
No idea.
Yeah. But it was like, here's your sign. That was the sign, right? I mean, it was great. And if you weren't paying attention, like, what are you even doing here? We were talking about it every day here on the show. Like, how are you not buying Tesla? Obviously ripped. As somebody who's in Austin, right? Are you a lifelong Austin guy?
I mean, I've been here 30 years. So, came for school long enough.
So came for school, partied, and stayed.
Yeah, except for a brief stint elsewhere.
Got it.
After
and then, so talk to me about
crash.
the sentiment down there, because last time I was there, they were in, I mean, it's been a few years, but they were in the process of, I guess it's maybe about 3 years, maybe something like that. But they were in the process of building that plant, that Tesla plant down there. And the people I was talking to were pretty excited about it, right? I understand it's Texas, but it's also Austin, so it's not like the most right. So kind of maybe more open-minded, somewhere in the middle, maybe a little leaning left. And they were really excited about that. So I'm kind of curious to hear your thoughts as to what people in Austin are thinking about the Orange Man and the Elon, and are people there as angry as they are in other parts of the country? Or I'd love to hear your thoughts.
I mean, Austin's kind of an interesting mix because it has it's had a lot of growth over the last really 10, 15 years. And it was a very small community prior to that. I mean, it's a million people, but it was still kind of felt a smaller town. And so we've got a big city, but it still kind of has that small town feel, like medium-sized city feel. And you've got the problem with Austin, and what I've noticed over the last kind of year is that and this is a very, very good thing in my opinion, as a Texan, is that Californians are not moving here anymore, and they're starting to pick up and move back because, frankly, nobody kisses their ass about their politics. And I think for the whole, Austin is pretty libertarian. You just have some kind of loud lefties, if you will, and that's fine. I have many issues that I go left and have clients on the left and everything, but it's interesting. And I think when you can divide a market and market behavior along political lines, that tells you a lot about the overall environment. Yeah. That tells you that even if we're having that conversation, this is a market trading on emotion. And you have to factor that in. And so what does that mean? That means you're probably going to get whippy. It's not going to be, and markets are not physics. So it's not like, oh, news item A happened, therefore market goes up 1% or goes down 1%. That's not how it works. And it's about the flows. It's about the attitude towards the flows, because you have to, I think when you understand that there's a medium happening between money stuff and market stuff, there's an in between the company and the stock, and that's the human behavior. Yeah. The human behavior gets in the way and just, messes everything up.
Are you guys paying attention out there? Listen to what he's saying. Listen, it's the humans, right? Because you've got the decimalization of stocks and the evolution of the market and options and crypto and all these new things. But the one constant is us. It's the lizard brains. It's the fact that our emotions run high when our stress levels are elevated, and when our stress levels elevated, when money's involved, and if you add a layer of politics, the crazy levels just increase, creating more opportunities with all of the irrational behavior by these humans. And we know for a fact that market returns do not fall under a normal distribution. The asset prices trend and sentiment exists, and there are unwinds, and this irrational behavior by humans can be taken advantage of. And that's what I try to do every day.
Exactly. I think we're going to get more of it. I think that's here to stay.
Fortunately, humans are not going to become less irrational.
Well, I don't know. Maybe we aren't here to stay. Maybe all these vaccines have created a humanoids, graphene oxide, making us do dumb stuff and just
even the robots. The humans are building the robots, and the humans are unplugging those robots and precisely
the AI is already here. It's just the AI is already here. It's already, the end is already upon us. It's just a question of when, right?
Jim, I got another question for you before we let you hop. You talked about there's still legs to this move, but you're not too thrilled. You're not too excited about the next decade or so, at least in America. Is that because you think that this American outperformance for so long over the rest of the world has gone the distance, and now is that rotation overseas that we've seen widest dispersion amongst returns between U.S. and foreign equities in the first quarter ever, right? So you think that's got legs, and Europe, after doing nothing for 20 years, is now getting going. China, after sucking forever, is now getting going. Latin America might get a bid. Is that where your head is at?
Well, maybe,
Or you
but
think
I
everything's gonna not
I
do
think they're going to have the same issue. I mean, ultimately, when you come down, I think what's happened in the economy in general and it's tough to really find this on a chart because it does. But I think we anytime you increase debt, you're borrowing future economic activity and putting it into today. We have had massive debt over the last 15 years. Like since the financial crisis, all of the money printing, all the debt that's come on board, both public, private. Think about the housing market since COVID. You know, what's happened is we've had this increase of economic output that I think this is what happens in this cycle. When you get the low interest rates at the end of a declining cycle, you end up with what's the opportunity? You have low interest rates. What do you do when there's low interest rates? You borrow stuff, you borrow money and you buy stuff. And so now that rates have gone up, two things have happened. One, people have accumulated a lot. Like how much do you really need? Like the incremental iPhone is not that great. You know, the incremental house is not that great. The incremental shirt is not that much of an improvement. Now it's all just stuff wears out and you have to buy new stuff. Well, I don't know that Europe or international is net. It could, because it should. It's been such a relative, weakling for 15 or 20 years. It was 2007, emerging markets and IFA basically, US is outperformed, but all this accumulation of debt makes the price today what it should be in the future. Like our home values, I think that's an easier way to see it. Home prices post-COVID, shot up, whatever, 100%, 50%, 200%, depends on where you are.
They haven't come down.
Was that real? No, but that's sticky. So should the price is right here. After that rise, the price is, $1 million for that home when it was probably $350,000 5 years ago. Well, from here, what happens to that million? I argue that because interest rates are high, you're losing margin, with higher interest rates. I think you lose some incremental buyers on margin. You lose some incremental buyers by just saying, you know what, I can get 5 or 6%. I wouldn't be surprised seeing 7 or 8% on TLT. And I don't think it's going to be that long from now. I don't think this year, but I think over the next 2 or 3 years, I think we could be pushing, 7, 8 handle on TLT.
Wow.
And right now you're getting what right now?
5-ish.
4.2. You're getting
4.20. Okay. Yeah. So that doubles. You think 50% loss in TLT is bad? But what happens with flows if we've got 7% treasuries? Not a lot of. I mean, you got short term.
I don't know. That's it's an unanswerable question, right? We don't.
I mean, in the early '80s, you had super high interest rates, and that was the best time ever to be buying stocks.
Yeah. The last two times we've been in rising interest rate cycles was in the 70s and the early 1900s, and there were 15-year periods from 68 to 82. The S&P and the Dow had a 0% return. 14 years of a 0% return. Early 1900s, it was like 1905 or 1903 to 1918 or something like that, that there was a 1% annual return over 15-year period. So the last 2 times we've had rising cycles, it's been competition for flow for stocks.
Challenging, correct.
All right, well,
and it's just been a wet blanket.
Last time,
so I think we need to keep that. I think that's a good, if we go into that, then it's about range trading.
What about speaking of range trading, and we'll finish up with this. What is the likelihood of an environment and a regime where interest rates are just choppy and just trade sideways for a long time, like we've seen, by the way, and stocks have done very well. Banner years in 23 and 24, banner years, and stocks as an asset class are doing very well this year, despite some of the underperformance in the United States. Again, in an environment where rates are really choppy, particularly in the United States, you think sideways for longer is a possibility? rather than just straight up.
I think what we're seeing with rates is we saw the beach ball being held underwater by the Fed for 10 years. 82 was the peak in interest rates. If you look at a 30-year cycle, that's 2012. That's probably when interest rates should have started going up if we really look back. But the Fed kept things, at zero and kept printing money like crazy. So they had their thumb on the scale really for the last 10 years, but to 2022, which was the low in rates. And, when we saw around COVID, it was the lowest interest rates in human recorded history. They have like barter transactions from ancient Egypt. And literally in COVID, it was the lowest globally recorded interest rates that we have on human records. So that's not normal. Like we're not coming out of a normal cycle. I think we went from 0 to 5 because we had the Fed keeping rates at 0 for 10 years, too long. And that beach ball bounced up. We're kind of normalizing now. And everybody's trying to get used to, oh my gosh, 4 or 5% interest rates. What in the heck? And that's on the low end historically. So, it's kind of like, oh, we went out of this pessimism, this extreme, crazy, pessimism. Surely that's the normal. So we're going to go back to this, crazy, extreme pessimism in stocks. That's the way interest rates are. It's, interest rates are not going back down to where they were. I mean, unless it's another 4,000 years and the cycle repeats itself. And we don't get hit by a giant ball of fire,
And the best charts ever are the charts of interest rates that go back to before the birth of Christ. Those are some of my favorites. Like if your charts don't go back 2,000 years, like, are you even trying? Like,
is that a log chart? I'm not sure.
It better be. It better be. Right. All right, Jim. Listen, we'll let you run. You gave us a lot of time. We appreciate you.
Thank you all. Appreciate it.
All right. Hey, let's bring on
Boots on the ground in Austin. Boots on the ground.
I love Austin. Austin's a great city. I've never really been to Dallas or Houston before, but I've been to Austin and it rocks.
Louis Blacks? So. Am I saying it right? Is it Louis Blacks?
I don't know.
Blacks? Is it Louis?
While you think of that, I'm going to bring on
Tony?
Mary.
Is it Tony Blacks? Oh, no, it's Louis Blacks. Dude, this brisket is on another level, dude. Okay. It's on another level. And the line might be long sometimes, but they give you beers while you're standing in line. So that's cool.
What's the name of that sausage house and beer garden in Austin that's famous?
Franklin's.
Maybe. All right. Mary, are you here?
Hey, good morning.
What's going on?
Just watching the market and, taking care of customers. Normal day in my world.
Day in Mary's life. Okay. You dropped a few charts in the deck, but I have to find them. Where'd they go?
Oh, that's okay.
Was it wait, were these your charts? The Europe and the Japan? Is that you?
No.
No, I was gonna say, what are these? Oh no, here we go. I found them. Into it.
That doesn't sound like me.
Into it. Okay.
Yeah. Okay. Let's start
that's
there.
You.
Did JC hop? Did we know JC?
I don't know.
Just you and me?
He comes and he goes. I don't know.
Oh my goodness. All right. So actually, before we even start with this, I can't believe we're 70 minutes into the show and there's been no talk of NVIDIA.
I mentioned it at the top, but yeah.
Has it been a chart? I mean, I'm shocked.
No
I guess maybe
chart.
Tomorrow.
Yeah, we'll talk about it tomorrow.
I didn't even bring it. Although some of the semiconductors, I have to say, some of those charts look spicy. I mean, NVIDIA looks spicy. Broadcom, TSM, Taiwan Semi. There are a lot of interesting charts setting up there.
I don't know what the expected move on NVIDIA is tonight, but whatever it is, I'll take the under.
All right. So funny that you guys were talking about the ARC Fund and Kathy Wood this morning. So that's kind of been for the last couple of weeks. I mentioned this last week. Kind of been where I've been watching or gauging kind of my risk on, risk off. ARC, Bitcoin. You can throw in some of the software and technology and consumer discretionary ETFs. Like that's kind of where I've been watching. And so into it is one. It's I believe in there ARC F. And this one
probably sounds like it. Yeah.
Yep. So this one hit my skin as I was kind of scanning through some stuff in the last couple of days. And love a good base, right? In fact, you could even call this a cup and handle if you wanted to. But Intuit is pushing up against making all brand new all-time highs. And if you actually zoom out on this one and go to a monthly, I mean, this is just a massive uptrend. And so, it's the kind of chart that I like to buy. You've got primary uptrend, consolidation here for the last couple of years, and now breaking out again. So I think if you're above just round number of 700, why not take this trade? And you've got very clearly defined risk. You're going to know exactly where you're wrong if we cross back below.
I love any trade with clearly defined risk.
Exactly. And that's kind of what I've been trading lately, just because, because we've had the move that we've had, maybe we do get some retracement or pullback or consolidation. And, maybe some things need a little bit more time to rest before they get ready to go. And so if things start to, fall back below these levels, that's going to be an obvious clue to me to just, get out, probably not get out for much of a loss, and wait for it to set up again and then get ready to go. So Intuit is one. This is a funny one, though, talking about Kathy Wood. So she actually sold some of their shares of Intuit back at the end of April. It's still in the fund, but
I mean,
right
she's always
before
buying and selling and
I know,
buying and selling.
but it was right before the big move here in the last couple of weeks. And so I just kind of found that humorous. So this is one that I like, again, just because you've got very well-defined risk. The other two that I brought along, another space that I'm kind of watching, the discretionary space of, watching the ETF, we kind of still are flirting with that area of those former highs back in 22. And so on. I know that JC likes to talk about this one. This is from our buddy Jeff Mackey. He's been all over this one.
He's pounding the table on this one. He actually got me into this one a couple of weeks ago.
Exactly. Yes. But I mean, why not? Because I mean, this is more or less a completed base from the IPO. And again, you could even call this cup and handle if you wanted to. But, as long as we are above 60, the risk is not owning it. The risk is up to the upside. And it's had a nice chance to kind of make a great base here since the IPO, and it looks ready to go. And if this is a bull market, which we believe it to be because all signs point to it, this should be, I would think, one of the great performers from the retail space.
Yeah, and the funny thing about the on is if you look at a 5-day chart and what day it was Friday when we opened down, we had brand new EU tariffs, right? The whole market opened down, and they bought on instantly,
like that.
Instantly, it was right off the open. That was the low of the day. Boom, you're done.
Yep.
So one of the things that I like about Jeff is he's like me. That there are stocks that he loves and owns, and stocks that he loves, but he hasn't bought, and he's like, "Oh, I'm just why didn't I buy that?" So with that in mind, I went ahead and bought the on because I thought I might regret it, and it's worked out for me so far. But yeah, he's been pounding the table on this one for weeks. In his streams, in his notes. So if you pay attention, you can find names like this because he's been all over it.
So this is another one. This one surprised me. So again, as I've been kind of running these little scans and just kind of poking around, actually TrendSpider has a brand new indicator feature that I've been playing around with that's super helpful to me. It is being able to scan by relative strength compared to the S&P. And so, this, then you're obviously being able to find, I'm trying to think what that indicator is called. It's just relative performance, and you can choose your benchmark. And so I've got it benchmarked against the S&P 500, and so I can scan by stocks that are outperforming the S&P 500. And this is one that came up, and it kind of surprised me, not from the sense of, it's actually a really nice looking chart. It's the company that surprises me. Tapestry, TPR. This is luxury goods. Again,
is this Coach? They own Coach, right? Okay.
Yes. So that's why it surprised me. Coach, Kate Spade, Stuart Weitzman. I remember Coach being a huge deal back in the early 2000s, which of course you can see that move in the stock price early on from when it IPO'd, and it just basically went straight up. Everyone had a Coach bag. I had Coach bags. Like the store just in the mall, when we used to go to malls, never had, very much inventory because they just were flying off the shelves. And, then it just kind of I don't see coach bags anymore. And it's been years since I've seen one out in the wild. And so the fact that this is pushing up against, that the former area of resistance, this is a monthly chart, obviously. So we just talked about how, you get big moves and then it takes a while. So the same with, you get a big drop, it takes longer to repair. Big move higher, it takes some time to digest that move before it can continue up. And so this, was not on my radar, but it is now. I like Kate Spade, got some of her things, but the coach thing kind of surprised me. And I don't really own any of the Stuart Weitzman either, but can't argue with a great base. And so there you have it.
This is what I want to talk about, though. It is officially it's boat season.
It is boat season. We've had access to the boat since the middle of May. We were in New Orleans, so I couldn't go out on the boat, and it's just been cold. I don't know what it's been like for you guys.
It was not. It was like a C- Memorial Day weekend here. It was quite cold.
It's been cold. It was great for tulip time because the tulips stuck around because it was cool. But it's been cold, and even going out, we were determined to go out on the boat on Memorial Day. It was a beautiful day. High of I think 70, but it got really windy.
Oh God, that's so cold.
I know, it got really windy too. And so then, the wind off the water, which is only in the 40s or 50s, made the air temperatures just really cold. And so we had our bathing suits on but we were covered up in towels and blankets. And, born and raised in Michigan. So I know when you go out on the water, you take lots of layers. But the boat is in. We went for our maiden voyage on
awesome
Monday. And so now you'll know where to find me if can't get me on the phone.
If you can't get Mary, she's on the boat. Michigan has more coastline than any other state, right? Is that right? I think so.
Yeah, I believe so.
More miles of coastline, yeah. Except for California, right?
Yeah, especially Great Lake wise, freshwater wise,
right?
Sure.
Freshwater, right?
All right. Fraley, yes, Holland, Michigan. That's a big red.
All right. A wise person once told me it's great to have a boat. It's better to have a friend who has a boat. So
it is.
I have to go find my friend who has a boat and hop on his boat.
Come to Michigan. I'll take you for a ride.
That too.
Great
all right.
area.
Mary, thanks for hanging out. I guess JC dipped out. That's all right. We gotta do what we gotta do. Okay. So we'll be back tomorrow with Eddie Elfenbein will be on the show. Ooh. And Strazza will be back. He had to take a spontaneous road trip. He'll be back tomorrow. And that's what we got. So thank you for watching. Oh, today is the final day of the Memorial Day offers we've got for Hit the Bid, Breakout Multiplier, All-Star Charts Premium, and All-Star Charts Gold Rush. I will make sure all those links are in the chat right now, actually. They should be in the description. If they're not, I'll put them in there. But
if you have questions, feel free to give me a call or shoot me an email. And if you're a member and want to bundle some stuff together, again, shoot me an email.
I'm dropping links in the chat right now. What is it? Is it 25% off, Mary?
25% off the annuals.
Yeah. 25% off an annual for Breakout Multiplier, All-Star Charts Premium, All-Star Charts Gold Rush, or Hit the Bid with Kenny Glick. This offer ends tonight at midnight. So get involved.
Act fast.
We'll see you there. Thanks for watching, and go make some money. All right. Adios.
Bye, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go